You overdraft your account by $4, not $400, not $4,000, $4. A coffee subscription you forgot was still active, and within minutes, your bank charges you $35 for not having enough money. That's when you realize something terrifying. Being broke is expensive, not emotionally, mathematically. Because the system doesn't punish the size of the mistake, it punishes the position you're in when the mistake happens. And the craziest part, the same bank charging you overdraft fees today might one day invite someone else to a private dinner overlooking the city skyline just for having enough zeros in their account. Same institution, different balance, different reality. Welcome to Evans Invest. Today we're talking about the invisible hierarchy inside banking and why the financial system treats people completely differently depending on the number beside their name. Nobody explains this when you're young. You think banks are neutral, professional, objective. But banks are businesses, and businesses optimize around profitability. That means the experience you get from a bank changes dramatically depending on one thing: how useful your money makes you. And the deeper you move into the financial system, the more obvious it becomes. At the bottom, the bank charges you fees. At the top, the bank removes obstacles for you. At the bottom, you wait on hold. At the top, they call first. And somewhere in the middle, most people slowly realize the system was never designed equally. It was designed economically. Level 1. Negative balance. The worst feeling isn't panic, it's exhaustion. You stare at your bank app and see a minus sign, negative $4. Then comes the overdraft fee, $35. The punishment is bigger than the mistake. And before you can recover, another subscription hits, another fee. Now your account is negative by almost $80 because you forgot about 2 tiny charges. This is where financial stress becomes psychological. Not because of the money itself, but because every small mistake multiplies. Your rent bounces, late fee, phone bill fails, penalty. Suddenly a $4 problem becomes a $200 crisis. And here's the brutal part. Nobody sees it happening. You still show up to work smiling, still reply "I'm good" when people ask, still pretend you already ate lunch. Poverty in modern society is often invisible, not because it's rare, but because people get really good at hiding it. Level 2. Survival mode. You finally recover. Barely. Your balance reaches a couple $100. You think the pressure will disappear. It doesn't. Now the system starts draining you quietly instead of aggressively. Monthly maintenance fees, minimum balance penalties, tiny invisible leaks constantly pulling money out of your account. And the most insulting part? You're literally paying a bank to store money you barely have. A secured card. Give us $300 of your own money, they say, and we'll lend it back to you. The financial system doesn't trust you enough to risk its money, so it risks yours instead. And psychologically, that changes people. Because after enough rejection, people stop feeling like customers. They start feeling like liabilities. But here's where things get really interesting. Because the bank itself doesn't suddenly become kinder. The algorithms simply decide you're useful now. And once that happens, everything changes. Suddenly, the maintenance fees disappear automatically. Nobody tells you why. The system just quietly removes the punishment. That's the moment many people discover a hidden truth about finance. The bank's rules were always flexible. They just weren't flexible for you yet. Then the credit card offers begin arriving. Pre-approved metallic envelopes, congratulations. The same institution that ignored you 6 months ago now wants a relationship. Not because you became smarter. Not because you became morally better. Because your account behavior changed. You became profitable. And profitability changes how institutions treat human beings. Level 4, $15,000. This level feels strange, because now the bank starts acting like it knows you. Your credit limit increases automatically. Someone from the bank actually calls you. A real human being, not customer service, a relationship banker. And that phrase alone tells you everything. At lower levels you had accounts. At higher levels you become a relationship. That's when you realize something uncomfortable. Access isn't just about money, it's about friction. Poor people experience constant friction. Hold music, fees, delays, paperwork. Wealthy people experience acceleration. Problems disappear faster. Calls get answered quicker. Rules soften. The financial system becomes smoother the richer you become. The most important line. And this is the part nobody says out loud. The bank was never emotionally against poor people. The bank was economically indifferent to them. But indifference at scale feels exactly like cruelty. Level 5, $80,000. Now the language changes. You're suddenly called a preferred client. You walk into the branch and someone stands up to greet you. You skip lines you didn't even realize existed before. Mortgage offers appear before you ask for them. Competitor banks start chasing you. The same institutions that once charged you overdraft fees now compete to keep your deposits. Why? Because your money itself now generates revenue opportunities. At this level, you stop feeling processed and start feeling protected. That's a massive psychological shift. Level 6, $500,000. This is where banking stops feeling transactional. Now wealth managers come to you. Private dinners, investment consultations, estate planning conversations. Nobody is selling aggressively anymore, because wealthy clients don't respond to pressure, they respond to exclusivity. That's why luxury finance feels calm, quiet, professional. The real sale already happened the moment you accumulated enough assets. And now, the bank's job is simply making sure you never leave. Level 7, private banking. At several $1 million, the rules begin bending. Not illegally, socially, operationally, quietly. Your calls skip queues. Your paperwork moves faster. Special investment opportunities appear. Loan rates become negotiable. And for the first time, you realize something shocking. The wealthy are not using the same financial system most people use. They're using a premium version of it. Same logo, different experience. Now here's the important part. This video is not about hating banks. Banks are doing what businesses do. The deeper lesson is understanding how systems behave around money. Money changes friction, it changes access, it changes patience, it changes how fast problems get solved. And most importantly, it changes how institutions prioritize you. That's why financial stability matters far beyond luxury. It's not just about buying expensive things, it's about reducing resistance in your life. Because financial stress is exhausting. Not dramatically exhausting, quietly exhausting. Hold music exhausting, late fee exhausting. Pretending you already ate exhausting. And once you escape that level, you realize wealth isn't just comfort, it's leverage. Somewhere right now, someone is staring at a negative balance, wondering how a $4 mistake became a $200 disaster. And somewhere else, someone with millions is getting invited to a private investment dinner by the exact same institution. Same bank, different reality. That's the system. And understanding the system is the first step to escaping the bottom of it. If you enjoyed this video, subscribe to Evans Invest for more deep dives into money psychology, wealth systems, investing, and the hidden rules that shape financial life in America. Because once you understand how money really works, you stop playing the game blindly.